Hello friends, Vlad is here. This is the weekly review for 12th of March 2012. The environment around Greece seemed to be good. And the news from USA in the third month in a row are very positive from the job market. Good news for the markets, good news for the dollar. That's why we see kind of separate moves. The dollar is make a move against the majors, but the indices on the same time going up. That's the separation we have, and it seems like it's too good to be true for the indices, and that's why it's the time to be careful. I'm not saying it could not go higher. Yes, it could, and we will see today the charts, and you will understand all exactly the things I'm talking about. But when all seems to be too good to be true, that's the time to be careful. For the majors, we have several interesting opportunities this week, and let's discuss about it. First of all, on the previous week, we talked about the yen pairs mainly, as you remember, and all of them did a move at the very beginning of the week, right? At the very beginning of the week, they made a crash and then retraced immediately up. Very interesting situation. We will talk about this also, all the yen pairs. Let's start with the euro dollar. Euro dollar is a very interesting pair. Many traders expect it to go higher to 138, maybe 140 again. But should it? Based to weekly chart, it could go as low as for the double bottom, right? A double bottom here to create an amazing divergence and then to make a huge up move. But also it has here a trend line with 3 spots, 1, 2, 3 spots on it. And we can see that despite this down move, MACD, right, keeps pretty much flat. Yes, on the last one it begins to aim a little bit down, right? But it's not as negative as it looks like with the last candles. Very interesting situation because the euro dollar could turn around and go high very strong here. For this up move, I would say let's wait for this trend line to be broken. First of all, before we can talk about any possible up move, right? For the down move, which also very possible despite the last news, a break below 130 for conservative, it's 130.60, 130.50 area. A break below this area should open the doors for the euro dollar to move further down. 129 could be a nice target for this down move. Is that a head and shoulders? Yes, it's a head and shoulders, but it's not at the end of classical up move, so it should be limited. But based to all technical rules, a break below this area should open the doors for further down move, especially when it comes after a divergence as we have had, right? RSI tried to break the 50, now tried to retest and failed, and now breaking down the 50 again. Very interesting sign. So a break below this 130.60, 130.50 should open the doors. On the up move, a break of this trend line should open the doors for the 200 moving average first of all, then to 138, then maybe even higher. Very interesting period for the euro dollar. Pound dollar, same story. And a down move should begin with a break below 156.50. Actually, a daily close below this area, 156.50, 60, that's the range. And this should open the doors for further down move for a duplication, which means we should see the 154 area, maybe a little bit higher, 154 area, maybe a little bit higher, being reached again. As we can see, indicators are negative. RSI tries to re-break the 50 again, which means we should see this negative environment, this negative move for the pound dollar. Based to weekly chart, we can go as low as for the double bottom with a new divergence, which also could be very interesting sign for the pound. For up move here, still need to see the break above the 159, a break and a hold. The previous time it broke, it did not hold, right? This time we will wait for the pound dollar to break and to hold this 159 or even 160, which is very psychological area, to get the bullish push. It could happen, but also a bearish scenario could easily happen if we have this break below the 156.60. And now back for the Pacific pairs, Aussie dollar and Kiwi dollar. We discussed about both on the previous week, and we said once this sideways move is broken, we should get the move down. It was broken, it was retested, and now seems like we rebuilding the down move. I still think that 104 should be reached, and this trend line should be reached, something like here, 104, maybe a little bit lower on the support. The Australian dollar should make it, and that would be the time to take a look for a possible, as you can see, possible beautiful duplication area, right? Possible beautiful duplication area with a divergence, right, to make a push higher. Could it make the stop before? Yes, it could. We have a very strong support here. We could have a double bottom, right? The indicators to make the stop and the prices to retrace up again. So I would say that we should be very aware for a possible up move, or from here double bottom if it makes the stop, or from the lower around the 104, maybe a little bit lower even, to make the stop, divergence stop, candle pattern stop, and to see the whole retrace up based to the waves moves and not just the levels moves. This is 1, 2, 3, 4. Now building a 5. A 5 could create a new low, where a 5 create a double bottom. All could happen. On the daily chart you can see this also, right? Alright. On daily chart, of course, it will be this duplication that we talked about, right? That's the area, pretty much like this. That's the thing. Alright, that's for the Aussie dollar. I expect the down move to continue as minimum as to the double bottom, but it could go lower, right, for the 200 moving average, and then to make the up move. New Zealandian dollar, same story. We said if we get a break below, we are going for duplication for the 200 moving average, which has been kicked here. Target reached. The New Zealandian dollar also could go lower to the trend line, right, to the trend line, to set the third spot on this trend line, to create some divergence on the daily chart, and to retrace up again for longer up move. That's expectations for the New Zealandian. On the 4-hour chart, very interesting situation, as we have 1, 2, 3, 4. It could be a 5, but it also could be just false move, like it was here, 1, 2, 3. All this could be 4, and a break below to create a double bottom or lower low, and then to make the up move. If we go higher here, right, we should be aware of this resistance again, or maybe a little higher resistance, with a possible 4-hour divergence to make it down move. But if it breaks this trend line, then we are going lower. The double bottom will be the first target, of course, and the next support around 080 will be the last target. And from the majors we are going all the way for the yen pairs, which the dollar yen will be the first one. Dollar yen is making a duplication for the Bollinger Band on the weekly chart, which is very interesting. Dollar yen is following not just extreme RSI but also building a divergence right now. I think dollar yen could go higher, 83, 84 or even 85, which is very welcome of course, because such moves build itself, right? This is a straight move, then a stop small, then another 1-2 waves, and then the whole down move to the area where all started, which will be the 200 moving average. It's going to be far, it's going to take weeks, but that's how it's going to build itself most likely. Dollar yen should play around these areas, should test the resistances here, right? Should test these levels to make play around, and then with the whole thing down move again. From my point of view, dollar yen and the yen pairs are the best to look for sell opportunities. We discussed about all the yens and all did the move, right? Now the next to do it will be the pound yen, dollar yen, and I would say Kiwi yen again. Pound yen is extremely interesting. We have 1, 2, 3, 4, 5 being building. It could be a double top and a crash soon, right? And it could take us a little bit higher, and from this high, which is around 130.50, 131, make the crash with this divergence that should be built here. So follow the yen pairs, friends. For the pound yen, it's the current area, and the next area to look is 130.50 to 131 with something. These resistances here, 130.50 here. This is the areas you can look, right? That's the first one, that's the next one, right? That's the range. It could make the stop around the divergence and bam, make the down move, and breaking through the 20 moving average should take us all the way down again to the 200 moving average. We can see here a move of 4, 5 or even 600 pips. Get ready, and it could happen very, very, very soon. New Zealandian yen, of course, same story. I said not once, this pair should make the move all the way to this trend line. I still think it's about to happen, at least to this line. Well, it did a move straight down, straight up. It could create a beautiful double top, and then the whole down move to the trend line. Stay tuned, it could easily happen. Any new high, from my point of view, is just to make lower low. Talking about majors, the question is that a time to be also in crosses? I'm not sure, because all the majors pretty much making the same patterns, which means they're going to be involved with the US dollar, which means for crosses for long run, most likely it's not the right time. Most likely it's not the right time. That's why I prefer to stick to the majors this week. Of course, now a few words about the indices. The first small correction happened, then up again. This up could take us higher for a new positive high, but we are being completely extreme here, and based to this move, right, and if it goes higher, we should see the correction at least to 2500 again. And based to weekly chart, friends, we have a right around the Bollinger Bands of the weekly chart. We have very, very, very extreme situation here. From my point of view, it should build it right now, build a stop around this area, and make the correction for this resistance to be tested. Maybe a little bit higher, but on the future, this resistance will be retested again. As higher we go, as stronger the down move will be. The same, of course, for the S&P. I believe that now, if it goes higher, it will build also a divergence on the weekly chart. So it's going to be a combination of weekly and daily divergences. S&P could take the previous high, the previous 2008 high here on the May, right? Around 1430. But the daily divergence is extremely strong. Something is about to happen. So, based on the last news, I'm not sure that's the right time yet, but I am sure that on the very soon future, something is about to happen with the indices, and we are about to see this move duplicated for all of the indices. From my point of view, it will take time only, and especially now because everything looks good. Situations from USA very good. Greece seems to solve their problems. Wow. Does that mean that the world behind all this problem? No. It means exactly right now, be careful. Be careful. And that's the right time, from my point of view, to look for sell opportunities. And for the harmonic pattern, you can see Nasdaq has a beautiful harmonic pattern. Extreme overbought. Any new high is to make stronger down move. So friends, that's my expectation for the upcoming week. Look for the majors, look for the yen pairs for good opportunities, and of course the indices on their highs. Thank you very much for watching this video. I wish you a very beautiful week and good profits. Yours, Vladimir.